In this video, I'm going to share with you the easiest, most beginner-friendly trading strategy that has allowed me to get funded over $600,000 in the last 90 days. This really is the most simple and fully mechanical trading strategy that I have ever seen. But don't take my word for it. Here's a sneak peek of some of the incredible results that the exclusive members have achieved trading this exact system. This genuinely is the only trading strategy that you will ever need, and let me break it down step by step. So this right here is the US 500, and we're currently looking at the 15-minute time frame. And this strategy that I'm about to share with you only requires 15 to 20 minutes of chart time, and once you are triggered into the trades, it's literally set and forget. There's no micromanaging, there's no interfering. It's literally either stop loss is hit or take profit is hit. All right, so let's just break this all down. The first thing that we need to understand is our directional bias. And all this simply means is, are we looking for longs here or are we looking for shorts? You're gonna have to hear me out here, but the most mechanical way to do this is by using the 50, 100, and 200 exponential moving average. If the 50 is less than the 100, which is less than the 200, like this example right here, this indicates that we are sell bias on this market. Therefore, we are only looking for shorts. I'm going to remove the EMAs, but please keep in the back of your mind that we are sell bias on this market. Because we are sell bias, step number 2 is identifying buy side liquidity, is understanding where the buy stops and stop losses are resting. And pretty much all of the time they are resting above session highs and session lows. So we can go ahead and mark on the buy side liquidity that's resting above the London session high. I'm going to mark this on in a dollar sign just so it's very, very simple, just to indicate that buy side liquidity is resting above here. Next, we want to see a raid of buy side liquidity. So this right here is a run of buy side liquidity. And so the next step is our confirmation. All that we're waiting for is the New York kill zone. And the New York kill zone is between 8 a.m. and 10:30 a.m. This is New York time. So we're waiting for a bearish confirmation during our kill zone. And you can see right here, this is the start of our kill zone and we get our bearish confirmation. So there's now a couple options for you. You can either enter on the break of this candle low. And if you want to keep everything fully mechanical, then this is what I recommend. Your stop loss goes just above the liquidity sweep and simply target a mechanical 1 to 2 risk to reward. Alternatively, for you guys that like a little bit more of a discretionary approach, you could look for a potential pullback before shorting this market. There is no right or wrong. However, I prefer to take the more mechanical approach. So I'm going to enter on the break of this candle low. And just before anybody thinks that I'm cherry picking this trade, let me share with you the analysis that was sent ahead of time to the exclusive community. And let me also show you the exact entry that was also sent to the exclusive community. So we're triggered in this trade right here. And as I said, this is literally set and forget. There's no micromanaging, there's no interfering. It's literally either stop loss is hit or take profit is hit. So now it's just a case of allowing that trade to play out. And you can see during the New York session, this trade did hit take profit for a 1 to 2 risk to reward. Some people may have even got a better entry if you looked at this retrace right here, or you may have looked at scaling in some extra positions on that retrace. Again, just so I can show you that I'm not cherry picking this trade, let me show you my execution proof from my FTMO dashboard. And the problem that so many traders face is when they are triggered in this trade right here, is having the discipline to literally hold that trade to take profit. And you may ask, why do you use a 1 to 2 risk to reward? And the reason why I use a 1 to 2 is because I've back tested this over 300 trades. This is also the exact strategy that I've personally been trading for the last 2 years. And as I said at the beginning of this video, this is the exact strategy that has allowed me to get funded over $600,000 trading only 15 to 20 minutes a day. And the reason why I trade this very profitable mechanical system is because most traders rely on discretionary trading, which basically means that you're using your own intuition rather than following a rule-based system. And so what a rule-based system like this one does is it removes all of the emotion and it makes you very, very calm within the market. The problem is you cannot make logical decisions whenever discretion is involved. And therefore this exact mechanical system allows you to rely on the probabilities because this is a data-backed system. And so you are guaranteed to make money over the long term as long as you follow the trading rules. So my one piece of advice, guys, is please stop strategy hopping and please stick to a proven mechanical system so that you can take your intuition out of it. I just want to give a shout out to Don, one of my most recent one-on-one members who literally got funded in less than 60 days trading this exact system. As always, thanks so much for your time and support, and you take care, guys. Bye-bye.